Secretary Ronald, my friend, other panelists, and dear friends. In fact, I'm just talking about what we did in Kerala for the infrastructure financing, or innovative ways. This was started around 25 years back. We celebrated the Silver Jubilee last week only. See, if you look at, if India has to come out and become developed country by 2047, we need to invest massively in the infrastructure side. If you take the case of Israel or South Korea or China, massive investment in infrastructure and technology development, this has happened. So we need to look at, generally if you give, I always say my state is a welfare state. I ensure welfare up to the farewell, up to the last person. We call it God's own country. Probably God is in Andhra Pradesh. I come to worship Bhagavan, my Guru, Bhagavan Sathya Sai Baba is here. So you are actually blessed with the God, but I call myself, we are from the God's own country. We ensure welfare up to farewell. So we are a welfare economy. But in the process, what happens is our focus on the capex development, infrastructure development gets a beating. So that is where we need, the state government has brought about 25 years back, we brought 𝐏𝐏 for infrastructure financing. And initially we went for bonds. I will just cover some of the areas which we covered, maybe knowledge, innovation, economy, because you need to continuously innovate if you have to be ahead of the rest of the world. Digital transformation, we are 100% digital literate. Then green and climate research, 1/3 of Kerala is already forest area. Remaining 1/3 is water bodies and others. So I have got only 1/3 Kerala, but we have supplied manpower to the entire world. The entire world decarbonization is, I have supplied 30 lakh people to carbonize the world. I can supply another 40 lakh to decarbonize the world. Skilling, maybe the manpower export. Skilling is another area which we need to invest, export the manpower. Then human capital and skills. Then we need to have a framework for that. We started in this, I hope all is visible. Yeah. It has come into existence in 1999. We have gone for a bond initially around 1,023 crores, but all those bonds have been redeemed. Second phase we started in 2016 by an act in the assembly, which was passed by assembly. So we ensure that the entire amount is refinanced through motor vehicle tax and the cess which we collect. So that, and if there is a gap, state governments give the guarantee that we will fill it up through budget. So the investors are assured. We went for the first time a state has gone to London Stock Exchange, raised masala bonds. Though there are a lot of criticism now with IFSC and Rajaraman sir was telling, we need not go to London Stock Exchange, we can raise it here in India itself. But that time it was not there. So we had gone there, we raised it and we repaid in time. We have financed projects in power sector. Power is one area, power is money, electricity is actually money. PPAs are there, there's a regulator. We were able to repay ahead of time. So now I think probably we need to have more regulators in water supply and other sectors so that investment can be financed. Then another area which we are looking at is roads. Maybe I will come to that, how much money we invested in the road work. Out of almost 99,000 crores which we have sanctioned, major chunk is on the roads. So now with the AI, we started initially tried with the AI cameras. So we don't stop anybody. Actually, it's saying that if you tell any person don't follow this, we would like to first violate. I said, if it happens, it is good. If it does, yadi nahi hoga to bahut acha. I said, if you follow the rules, I am happy because accidents come down. If you don't follow the rule, I am doubly happy because I can charge 500 rupees per violation. I put cameras in 700 odd cameras across Kerala, the national highways. 270 crores was invested. I got more than 700 crores in the second year itself. So my repayment of the entire investment, I didn't put any money. I put the private sector, they invested it. So I got the money. Challans are generated. There is no human intervention. It goes into Morth website. Challans are generated. Message goes to the person. If you don't pay, we will take you. There are various umpteen other ways because generally world across, what is the greatest power? Greatest power is nuisance power. Governments people respect because of nuisance power. We We are scared about some power because their nuisance value is very high. So government can make sure that the money is recovered from them. So in nutshell, we brought the legislation, then the KIFI model, and we have got financial supporting and ring fence. So in that, motor vehicle and other budgetary support is there. So we are able to make sure that we are able to get the lowest rate. Typically 8.5 to 9% we are able to raise the money. So long-term bonds, 8 years to 15 years. So this is the structure. Maybe we have got a board and the chairman is, Chief Minister is their chairman of the Infrastructure Investment Board, and the Vice Chairman is the Finance Minister, then Chief Secretary, all of us are members, Finance Secretary, Resources, all of us are members. We have got 7 independent members, so that majority of them, because they are the independent members, only will drive it. Otherwise, we will always try to, say that it's a government will do it, but I think they keep a check and balance. We have got an executive committee, then the fund trustee and advisory committee, very, very important. Then investment management committee is there. So this is the probably the share of motor vehicle tax and cess which we have collected over the years from 16 onwards is there. Roughly around 3,000 to 4,000 crores we are able to collect. If there is a gap, I think we have been giving it from the budget. Type of projects, mostly infrastructure, 1,183 crore projects we have financed, around 70,000. But land acquisition is another project which we have financed, because especially for National Highway, we have spent almost 5,000 crores for the National Highway development. Probably first state to invest so much in the National Highway, 25% of the land acquisition cost, the Government of India insisted that we should bear. We have borne it. So these are the projects, maybe mostly in PWD, if you see, 34,255 crores worth the project has been sanctioned in the PWD. So infrastructure is one. That's where we are now bringing the Toll Act. Now, first we started with the AI camera. Now technology is there. FASTag is there in all the vehicle. Based on the number of kilometers of usage of the road, you keep on driving, I will take you from your FASTag. So we are happy that you use more roads. So even local roads, panchayat roads, everywhere we can do that. FASTag, you recover the amount. So Toll Act is ready. Same way, I think water resources, we are ready to start. Probably we don't have a regulator in place. Power sector regulator is there, so no issue, we have got a prepayment. Then I think these are the sectors which we have done. And if you look at the projects approved in the land acquisition, I think I covered. Then completed projects in each of the sectors. There also, I think PWD did the maximum, and other departments have. These are the list of projects. Probably I will not get into the details due to paucity of time. These are the disbursements over the years. If you see 10% capex of GDP 10%, we were able to achieve it only because of the massive infrastructure investment which was done. It is like we build a house. We build a house in the beginning of your career, not at the end, after retirement. So same concept. If you can take loan and then repay over a period of time, and except probably judiciary is the only place we say that we give our case now, next birth only you come to enjoy it. You enjoy when you are alive. After all, a human being lives on earth for 8,000 days. 8,000 days he sleeps, 8,000 days he is spent on, eating food, all other these things. So these 8,000 productive days, if we can make it, let him enjoy his life. So that is why government should invest highly in capex, probably repay over a period of time. So these are the agencies, lenders. As I said, we went for masala bond initially, then we went to NABARD, term loan from the banks, bonds, REC, HUDCO, then KSFE, Kerala Finance Corporation, Power Finance Corporation, all of them have been giving us the loan, and we are ensuring the road repayment. We have got a corpus fund, as I think this in a nutshell, these are the deposits which we are having now. And we have got a very good project management system, right from the project DPR preparation till completion and repayment is taken care of. Everything is digital. We have got a ALM, that asset liability management AI system, by which the fund board, also the risk involved can be predicted in advance. And this is the sustainability chart. And we have got various audit committees. One is on the statutory audit is there by external CA, local audit by CAG, tax audit by external CA firms, internal audit as well as secretarial audit. So systems are in place. Then ESG, we make sure that all our projects are ESG compliant. Otherwise, we may not get multilateral funding. So technical service, we have got a wing for KIFCON, for a consulting wing called KIFCON, which do the DPR for the, we have taken now Wayanad tunnel project for Wayanad, connecting Wayanad with Calicut. So then airport, Sabrimala airport, we have already got 4 international airport, 5th international airport is coming at Sabrimala. That DPR is also done by KIFCON. So this in nutshell is what we have done. So I would like to maybe get some more suggestions, or maybe if you have got any question, you can ask. Thank you.
Good afternoon, everybody. So good afternoon to Sri Ronald Rose, who are organizing this, and also other esteemed delegates on the dais and off the dais. So I am 𝐕𝐤𝐣𝐚𝐲 the moderator of the session. We are in the LPG era, the liberalization, privatization and globalization era. So this requires a lot of changes according to the current trend. So now PPP, I used to call it as 4 Ps, because public-private partnership for people. So those programs, whatever we do, are people-centric. That is why even on the national scale, in the past 3 years, the government has been concentrating on a lot of PPP programs. Almost 8 lakhs crores plus programs have been sanctioned. Hundreds of programs are being sanctioned in major infrastructure area. PPP is normally a relationship between public and private. We all know that. But when it comes to relationship, I compare it with our marriage relationship. So first people have to be satisfied, then bride side has to be satisfied, then bridegroom side has to be satisfied. So here again, both public enterprise and private company, so both of them have to be satisfied across different factors. The major common thing which we foresee is more than the infrastructure policies and development, the implementation. So if you look at a lot of reports which review the infrastructure projects, they talk about monitoring failures or implementation delays. So there are a lot of financial closure delays and execution time delays and other delays. We have to set up a lot of innovating models, not only in setting up the project, but also for monitoring and implementation. So I know a lot of companies, for example, into healthcare, where they have a lot of remote monitoring devices. So half of the hospitals in the US are being monitored from India today. That is happening. The ICUs, CCUs, everything is being monitored today from India. Basically, they use a lot of AI and motion sensors, all other your gadgets to monitor this. Similarly, the infrastructure sector, when it comes to monitoring and implementation, a lot of investment have to go into capital investment for monitoring and implementation. Like Sir said about human capital, also capital investment for monitoring and implementation has to be done. So these are some points, and there are a lot of myths about infrastructure sector. Today we wanted to clarify. We have an esteemed panel here, so I will start with them. So Sri 𝐾𝐧𝐺. So just now we have presented about the Kerala states, whatever implementation you have done. So can you please elaborate about what lessons can be drawn from them for other states and for the nation?
Yeah. First one is, as I said, infrastructure is investment is one area. If you want to become a developed country by 2047, that means you need to look at alternative ways of financing. Just like we build a house, we take the loan and invest it and then repay it. So one is alternate investment fund. InvIT is another area where, especially in power sector, where repayment is automatic. For solar, you are setting about pumped storage, where I think InvIT is a very good model. We have got to set up an alternate investment fund. In fact, IFSC, all of them has helped us in building it. This is another area. this infra KIFBI model is another area. In my opinion, I think probably we should put another 0.5% exclusively for capex. Now 3% is our GDP we are allowed to borrow, and 0.5% for the power sector reforms. In my opinion, I think because mostly the first priority for every government is, instead of vision, we are vision. We need to strategic thinking. There are three things which are important: Tantra, Yandra, and Mantra. Tantra is nothing but strategy. In every temple there is a Tantri who is supposed to be supreme. In Sabrimala also Tantri is there. Mantra, the business process, re-engineering the processes. And the Yandra, the machinery. We are now competing with the countries like China. It's like a Formula 1 racing. You are going with the ambassador car. So you need to have the latest Yandra. So entire machinery has to be modern. The art of the Max Weber found bureaucracy. I think that now management has changed a lot. So second is the business process re-engineering which need to be brought about. That is what we did. We said, see, KIFBI, though it is part of finance department, but they are outside government. In the sense that A to Z, including the project, DPR preparation, approval, appraisal, sanction, monitoring, payment, A to Z is outside the treasury. Nothing comes to government. So we have put a professional team, 300 people, professionals are working. So to monitor each project, and so ESG compliance, everything is taken over. Last one is Tantra. If their strategy is not correct, if your vision is, instead of vision, we are having division. We make it into 5-year vision. It's not a vision. Vision is strategic, maybe 50 years or 100 years. So I think that is something missing. Governments may come and change, but may go. But the think tank and the strategy has to be same. So I think this is one thing which we brought about. Long-term infrastructure with a visionary outlook, what the state needs, what the country needs on each areas. For example, we have found 3-4 areas, critical minerals, space technology, where we have got upper hand, or wellness economy. So these are the areas I need to develop the manpower, develop the infrastructure investment on the higher education and R&D. As I think in the morning session somebody said, R&D spending has to increase. We need to continuously innovate, and we need to invest in the higher education and the R&D sector for you to, create wealth. So these are some of the lessons which I thought we can give to other states.
So those are valuable points, sir. In fact, when we talk about India is very popular in having precision manufacturing. But there are higher precision manufacturing when it comes to space, defense, and much more higher precision in medical equipment manufacturing. So those industries require a lot of innovation and investments.
Yeah, definitely. As you said, in fact, yesterday only I went to ISRO to address. See, the youth there, they innovate. In fact, all satellites in the world are monitored by the IISc students. Only developed a module. You can monitor every satellite. It's a frugal innovation. India is known for frugal innovation. So we need to give that creativity. That's why I was telling, one is the startups to scale up, there has to be funding. I was suggesting that 1% of the wealth of the billionaires in India can be given for a scale-up fund, which can be available at 4% or 5%. I am sure the scale-up ecosystem will come. India, we mix science with political science, because science is, and both think that science is there at the end of political science. We don't know which is scientist, who is political scientist. So most of the scientists, because I studied from IIT, most of my batchmates are from Andhra. I know 99% of them went to US. Now some of them are returning thanks to Trump. The reverse brain drain should happen. That's because time for them to come back. So we need to create an ecosystem for them to invest and grow. And for example, last time I've been to one of the family offices in most of our billionaires' children either go to Singapore or London or US or Dubai. One of the close friends, he has got a family office. I went. He said, I can start the company in 24 hours. Okay, in India also we may ease of doing business, it may be possible. But can you close the company in 24 hours? No. So closing company is almost impossible. Why not we make that entire, as Rajaraman sir has mentioned, let us amend that entire, all these archaic rules by which we can ease of doing business, and cost of doing business is another thing. Because unless, as BCG has said, cost of land, cost of, like Sembcorp, they had a very good model. Cost of land, cost of power, one of the lowest. They cross-subsidize the industry so that more industries will come to their country. I think this is what we need to look at, and maybe reforms have to be brought about. Thank you.
Thank you. Sir, Sri 𝐾𝐧𝐚𝐧𝐿 sir, what challenges and opportunities you have observed in partnering with the private sector and development financial institutions?
Good morning to all the distinguished speakers on the dais and all my friends, colleagues, and thank you to Ronald sir for hosting us this wonderful summit. When it comes to municipal finances, in terms of PPP, there are a number of challenges in terms of structuring of the model, then in terms of the confidence of the investor, because as sir was mentioning, we are in the political setup of democracy. There are political risk associated, there are operational risk associated. So all this risk pose a huge questions to the viability of the project. So there the challenges lies ahead. So in terms of PPP in municipal area, I'll cite the 4 or 5 examples which we have tried across the generation, let's say in Visakhapatnam and overall in the state of Andhra Pradesh. The first one was the municipal bonds. The municipal bonds was given, there were 4 calls, there were 4 times the subscription was given, and it was fully subscribed. So GVMC, Greater Visakhapatnam Municipal Corporation, in fact the building where we are sitting today, it was initially funded through the bond. So around 250 crores were subscribed in all the 4 tranches. It worked well, all the 3 have been repaid also, and 4th one is going on well. The 4th one particularly is funding our sewerage project. So whatever UGD we are having in this area particularly is the financing came through the bond. Recently we have entered into relationship with Mr. Neeraj also in the IFC, and we have been the first municipal corporation in the country where IFC as an international organization, they have funded us directly. Of course, not in a PPP model, but the trust in the local government body without any guarantee, any support from the central government as well as from state government. There was direct financing to the ULB. So when it comes to the challenges, the answer lies in the management of the books and the cleaning of the books. So what we experienced in the municipal bonds process is the thorough scrutiny of the books. In fact, we found out many defects and deficiency in the process itself, which were rectified in a due course. The second example I will cite of there's a separate SPV called 𝐕𝐢𝐣𝐚𝐲 which is part of GVMC. 𝐕𝐢𝐼𝐴 supplies the water to the industries which are coming in this area. So just to give an example, GVMC is the second largest in terms of geographical area in the country. After Chennai, it is larger than the Bombay, it is larger than NDMC. After Chennai, this is the second one. So we have the huge area which require huge supply of the pipelines to the industrial area, industrial batteries which are running across. So we have taken money from them, we have invested in equity. The pipelines were laid by the industries, of course with the partnership of the GVMC, and now they are paying back, now they are giving the money to the GVMC for the uses of water. So this has been successful example. Now we are sitting at around 450 crores of assets in the industrial pipeline supply only, and we are getting revenue out of it. So this was the second example where the PPP was tried successfully, it is running successfully, particularly in Visakhapatnam. The third example, as Jyotla sir was citing, with the solar. Solar is a new trend, and it has been tested, tried, established across the states, across the areas. In Visakhapatnam, for example, now the virtual connections are available. So the developer is putting plant somewhere in the X location. He is charging bill to me in Y location in Visakhapatnam. My power bill is around 4 to 5 crores monthly. So 1/3 of the money is getting through the power subsidy from the solar. So I'm actually paying 3 crore, 1 crore is my benefit in this, with no cost of mine involved. The land belongs to the X area, which may or may not be in Visakhapatnam. I'm just getting the virtual connection. I'm just the developer of the co-developer of the solar infrastructure project. So without any investment, I'm getting money in terms of reduction in the power bill. The last example, which we are in process now, is the desalination of water. We have the sea. When you are sitting here, just beside your backs, we have the sea, huge sea waves coming here. So we are trying the desalination project. In the desalination also, the developer is coming forward to develop the project. We have to lay the pipelines, we have to enter into PPP model and supply the water to the industries. So these are the some models where we have tried so far, and the confidence which have been built across the decades, I would say, in terms of management of books, despite of all challenges, all political risk and other risk, the cleaning of the and the transparency of the books. in the bonds and other process, we have the accounts available online. Now, Ronald sir is scrutinizing us more deeply, so we are also complying with a greater commitment. So that helps actually in bringing the PPP investor here, and that is how we are going forward, and we are very sure. I came from Rajahmundry, Rahul is here, so in Rajahmundry is a small corporation, maybe a budget size of 100 to 150 crores. So in that area also, we are trying municipal bonds. So if the investors are coming, we have been very sure, now Government of India is giving 13% subsidy also. Our coupon rate is 9 to 10%. So we have been very sure that we are getting positive response on municipal bonds. Now the new area which we are going to try is the green municipal bonds, which we have more commitments towards the environmentally sustainable projects. So this is our journey so far, and the answer lies the same. Thank you.
Thank you.
Yeah.
So we have Sri Ranjit Singh ji. So everybody talks about bullion, and especially across India, bullion is a very trending term now. What innovative financing models comes from commodity and bullion exchanges towards PPP financing, sir?
Good afternoon, everyone. At the outset, I'd like to thank Mr. Ronald Rose, IS, for giving this opportunity to talk about innovations related to financing project PPP and what 𝐈𝐧𝐼𝐵X is doing as a bullion exchange altogether. I'll give you brief how 𝐈𝐴BX works. Like bullion, especially the gold market, it's a regulated market in India. See, prior to 1992, you know what has happened. You cannot hold a gold unless you have permission. Holding dollar was permission. Then the new government came. They come up with a lot of things which is permitted now. See, as a bullion dealer, I may call it a jeweler who requires a gold to make a jewelry. I cannot buy directly. When I say directly, I cannot import directly as is permitted in other commodities. I have to go through a channel which is called nominated banks, which are permitted by RBI, or nominated agency, which are permitted by DGFT. The third channel, which was approved in the year 2000, Ministry of Finance has approved that we should have an exchange in GIFT IFSC, where certain entity, those entities are called as qualified jailers. When I use the word qualify, it means you have to meet a certain criteria to become a qualified jailers. And TRQ holder, tariff rate quota. Since we have Indian government and UAE government have an agreement, it's called SIPA agreement. It says any gold which is coming out of the UAE will have a duty concession. So TRQ holders can buy. Then we have a qualified supplier, basically the person who supplies gold on exchange platform. See, our platform is a digital platform, is similar to other platforms. What we have is like, we have a gold minimum 100 grams and we have a gold which is of 1 kg. So depend what type of entity they want to procure. They want to go for 100 gram gold or they want to go for 1 kilogram of gold. Second is that system. When we talk about exchange is a transparent democratic system where you can be able to view what the price what price is being offered by the supplier and what price I'll be getting my gold. See, so what will happen is any exchange you talk about, not about the bullion exchange or commodity exchange, worldwide also. CME is the biggest commodity exchange in the world. They have almost the trading volume, if I talk about on CME on the daily, it's 800 tons of gold traded on single day. 800, that's the kind of transparent system they have built over a year, right? It's a robust system they built, because if any business has to sustain any project finance, you have to go. The transparent system plays a very important role, and how robust is your system. See, getting finance, not a difficult task, right? So you can go approach if you have a project which can get you. But the thing is very important for any person who invest in your project or invest in your company, is that how transparent you are able to put across your thoughts or vision for that company. Second thing is like what 𝐈𝐴BX has did, that small, see, earlier the bullion industry was controlled by the big bullion dealer who have a deep pockets, right? The gold cost 1 kg is around 1 crore 25 lakhs. If I have to hold 100 kg is equivalent to more than 125 crores. So it was controlled by a big bullion dealers and deep pocket people who can able to buy a gold at higher rate. What IIBX did, we identified that process. We enrolled a small jewelers. If you have a criteria, that is, if you have a net worth of your company is 15 CR, that means only 15 kgs of transactions you do, you can able to act as a qualified jewelers and can import gold through IIBX. Second project which our regulator, you heard our chairpersons talking about, was commodity project which you are working. It's called Project ACE, Activating Commodity Ecosystem. See, right now, India is the largest consumer of commodities. We import some commodities and we export a lot of commodities also, right? So we working on a product where commodity, they want to create a commodity hub, whether on the spot side, whether on the derivative sides. Derivative is basically used for hedging your commodity price risk. So what it can happen is, see, commodity plays a very important role, the company which are into manufacturing companies. So if I talk about steel company, they have to import iron ore to make a steel, right? So we are creating a platform which is under development side, where the person, if it's a steel company, doesn't have to go hunt for a mining company which can supply ore to them. We can list those companies on our exchange platform, which can provide you ore on an exchange platform. We tie up with the various SEZ zone where the these commodities will be stored. Thank you.
Thank you. So we have with us one of the prominent persons behind the Delhi Metro Rail project and its successful implementation, Shri D.R. Padmanabhan. So we want you to share with us the key lessons. Mr. Neeraj Gupta, the Principal Investment Officer, International Financial Corporation. So can you share with us the financing instruments and financing models you suggest for the PPP framework?
Sure, thank you. And I'll express my gratitude also to the organizers, Government of Andhra Pradesh, Mr. Ronald Rose. So IFSC has been investing in PPPs in most of the emerging markets, including in India, for decades now. And I think, as previous speakers have said, there are a lot of challenges. I really like the statement that Mr. Ranjit made, that financing is not really an issue. It may sound a little ironical given all the discussions we have been having since the morning, but we need to unpack this statement. Financing is not an issue in the sense there's enough liquidity and money chasing projects. The problem is the availability of good projects, and the operative word is good projects. What we mean by good is well-structured projects. So we can do all the financial engineering and jugglery. We can bring in blended finance, concessional loans, VGF. For the urban sector, we can converge money from Amrut, SBM, UCF now. But if the underlying project fundamentals are not good, then none of that will work. None of that will be able to mobilize private sector capital. So what we mean by that is that, as a lender, we need three things. We need a fair degree, and fair degree is again a very important word. We need a fair degree of predictability, stability, and assuredness of cash flows from the project. And if these are not coming from the project, we need them from the entity which wants to close the project or borrow money. So let's take an example. I think about 12, 15 years back, we invested in a water concession in India. And it was a water distribution PPP. I think we were stupid to put our money in this kind of a project. These days, no one will invest in a water distribution project. And that project was based entirely on a policy statement by the government that water tariffs will be increased in due course. So we invested in the private sector which had the concession. Now obviously the government was not able to increase the tariffs. And that's one of the rare NPAs we have on our books today. So, and that is what I mean by we need a fair degree of certainty that the project cash flows will accrue. And in the absence of that, what we look for is a bankable entity. And there comes in, things like sponsor guarantee. If a private sector company wants to borrow, they will have to give a sponsor guarantee if the project cash flows are uncertain. And I'll go back to the example that Ketanji mentioned of the municipal loan we have recently approved for Vizag city. It's for a project which cannot really be bankable for a long period of time. It's a sewerage project. We know sewerage charges. Nowhere in the world they cover even full O&M costs. Forget about capital costs. But 𝐈𝐧𝐼𝐴C has a healthy, industrial water tariff. They already have good bankable projects operating for wastewater recycle and reuse. But this greenfield project will take perhaps 7, 8, 10 years to reach that stage. So meanwhile, how have we been able to give a loan of 500 crores to GVMC is because GVMC's we have enough faith that GVMC's books of accounts are fair, transparent, and they have a healthy surplus to service our debt. So these kind of things become very important, and therefore the difference we need to make is between a bankable project, how far we can push a project to bankability versus a bankable entity. With the entity that wants to implement that project is that entity bankable. So these two aspects need to be kept in mind. And then all the layers we can add on top, credit enhancement, blended finance, there was a big discussion in the morning. But I think on that, I have one key comment that, and it was a question that Mr. Ronald asked, is blended finance really cheap? It's not. I mean, the short answer is it's not. Even the sustainability linked finance, and we've done, I think, 10 sustainability linked loans and bonds in India across sectors. We've done it in road platforms, we've done it in InvITs, we've done it in rooftop solar platforms. The step down in interest rate is hardly 5 or 10 bips. So that's about 0.05 or 0.1%. The maximum we have done is 0.15% in Bogota in Colombia. And it takes a lot of effort in doing. So I think that myth needs to be busted. So the question might be then, what is the point of all this noise about green bonds and green finance and blue finance now? I think one is branding. Second is it opens you up. It opens up possibilities for a different class of investors. There are a lot of investors these days who are looking to finance only such projects. So you open up, a lot of more number of dollars become available to you as a borrower. I'll stop with that. Thank you.
Thank you. So Dr. B. Gopalakrishna, IAS. So how can finance department facilitate the regulatory clarity to attract private investments into large infrastructure projects?
Thank you. Good afternoon, everyone. At the outset, I would like to thank the organizers, Finance Department, Government of Andhra Pradesh for organizing this and conducting this brainstorming session. I must remember yesterday's electrifying speech by the Honorable CM and an eloquent speech by the Finance Minister. He spoke with conviction, and also the sessions that are being carefully curated by Ronald sir. Grateful to you for that, sir. Let me begin with a question. So I want you guys to answer, which is the first city to implement CCMS smart light systems in the country? Anybody? Yeah, so we all know the CCMS, that is the centralized control monitoring system, LED system that we have in this beautiful city of Vizag. Such a great model which was emulated across the country. More than 10 corporations in Karnataka we have emulated and we have implemented such an innovative model. In fact, that was posed in the BRIC Summit in 2016. Similarly, me coming from the finance department, seeing the budget making process, where we spend most of our revenues on the welfare schemes, populistic schemes, and salaries and pensions. Just to give you the figure, our budget is 4,09,000 crores and we spend 1,20,000 crores on salaries and pensions. 55,000 crores plus on our 5 guarantees, which takes away the major share. And as you know, the regular O&M and the ongoing schemes, again, planned around the social sectors take majority of the chunk. We are left with minuscule money for the capital expenditure. That is where we are looking for innovative financing, different models of And here we are discussing about such systems. It is the need of the hour. It is just not a buzzword, I would say. Public-private partnership, it's a strategic partnership between public sector and the private sector, who at the end of the day will share risk and reward. As a department, as a government, part of the government, unless we define these risks and rewards, these systems are not going to work. The risk sharing should be optimal. Yesterday, Honorable CM was telling, the political risk, the demand risk, and all the regulatory risk will be handled by the government. And he spoke with conviction. That is where the financial institutions, sir was mentioning, the fairness, the transparency, and the regulatory frameworks, if they are in place, I don't think there is dearth of finance. We have enough financial institutions, multilateral agencies who are coming forward to give the loans. But at the end of the day, we need to build trust and fairness in the system. So we, as part of the government, probably we are super successful in maintaining the status quo. Maybe it is high time that we need to change ourselves, transform ourselves from administrators to innovators. And we need to embrace public-private partnership. So how do we do it? So most of us who are working in the departments, we become jittery when it comes to the contract agreements, any court cases. So we need to build our capabilities by having a specialized PPP cell that looks into these contractual frameworks, the legal frameworks, so that we have the knowledge not to get the perception of exploitation. We always think these private people, they're exploiting us. And they have a very good legal system. They pick the lacunas and they go to the court and they get the orders in their favor. This is our complaint. But high time that we need to establish systems where our people, they look into these agreements, design frameworks with due diligence, and have that the confidence, and also that which will in turn build trust with the private players. So, so there are a lot of examples. Again, I want to reiterate one more point here. So when we are discussing innovative financing, we should not miss the buck should not stop there. So yes, we have enough financial instruments, enough financial institutions coming forward. But at the end of the day, unless we have some innovation coming from the private industry, like the one with respect to CCMS, which will reduce the cost and at the same time improve the quality of the citizen delivery systems. So it is not about the financing alone. The private industry should come forward with their innovations and then bring money also. So that it can be utilized, and the public infrastructure can be only built probably by tapping the private potential at this juncture throughout the country. In that direction, this 2 days of brainstorming platform was very much essential. We'll be carrying a lot of things back to the state and reimagining the public finance. So thank you so much.
Thank you. So we have with us Sri Sagar Palaji. Sir, how can insurance and risk mitigation products boost investor confidence in investing in infrastructure projects?
So thank you very much, sir. I represent SLIC, State Level Insurance Committee. Thanks to Ronald, sir, for moving the file quickly. So from Life, PNB, from General Universal Sompo, from Health, Star is there. And we are in line with the national vision of insurance for all by 2047. And the regulator has given a target of covering 15% of population in every Gram Panchayat. So we have adopted 4,000 Gram Panchayats and we have started our awareness camps and recruitment. And thanks to state and central government for reducing the GST to zero. It has built a lot of confidence, and we have seen a lot of business coming in. And talking about insurance, it's like for a car, how brakes are important, how airbags are important to move the car fast. For any economy to move faster, it requires insurance. So coming to the question, how insurance help big infrastructure projects succeed? First, insurance builds trust and confidence. In a layman terms, imagine building a bridge or a solar park. It takes crores of rupees, years of work, and many risks like floods, delay, and legal issues. Insurance acts like a safety net. It tells banks and investors, even if something goes wrong, we have got your back. For example, in a highway project, our insurance covered delays due to heavy rains. Because of this, the bank released the fund faster and the project stayed on track. Second, it protects public money. When the government partners with private companies, it doesn't want surprises that cost taxpayers more. Insurance helps the government sleep better, knowing that if something breaks or gets delayed, the insurer will step in. Example, for a water treatment plant, we insured against sudden rule changes. This saved the state from paying penalties when regulator shifted. The last, insurance opens door for smaller contractors. Big projects often need guarantees. Small business can't always afford them. With our insurance bonds, even local contractors can participate, bringing jobs and growth to their towns. Example, in a rural electrification project, we gave insurance-backed guarantees to MSME so they could bid and win contracts. Thank you, sir.
Thank you, sir. Thank you. So we looked at a lot of innovative financing models like blended finance, viability gap funding, and a lot other models. So there are also other areas where we can look into piping the finance from private corporates and large corporates. We have the concept of corporate social responsibility. So under CSR, if infrastructure projects can also be included, because all companies has to mandatorily invest certain percentage of their profits into corporate social responsibility. So this infrastructure projects also is for the public welfare. If we look at piping the CSR funds into infrastructure projects, all the mid and large corporates will be much interested in it. So that is one area, again, we can look for innovative financing. As we normally say, to unlock the demographic dividend, 1% of the GDP has to be invested for additional achievement of 1% more GDP. Our nation has been doing it and we will continue doing it. Thank you.
Good afternoon to the panelists. I have a question for B. Gopalakrishna sir. That, like you mentioned, that there is a push for innovative financing models in PPP and move towards decentralization with state-specific concession frameworks, DCAs and RFPs in urban infrastructure. So I want to understand what are the prime considerations for lenders and investors when evaluating such agreements like DCAs? And also, does the novelty of these frameworks influence lending terms or risk assessments by the financial sector? And how can this encourage more participation from players?
What I understand is how to, bring the private investors to come and participate in these sectors. Okay. So basically, see, a thing will speak for itself. State of Karnataka, we are in such a position. So if the state is willing to give government guarantee, anybody in this world will come and give the loan because of the institutions that has been built over the years. The political scenario majorly dictates the proceedings. The second thing is the officers. And see, for example, in finance, maybe like even with the government of Andhra Pradesh, there is a legacy of training young IAS officers for a period of 4 years, who will again probably come back and work in these sectors. That institutional knowledge is passed on. So similarly here, you should have a designated, dedicated PPP cell with probably well-designed templates, which will actually fit into different sectors. And then the first and foremost thing is the political I would say, framework. And the second thing, there should be some models of, the islands of successes, so that it can be emulated across. Let us start from the scratch, or maybe we should pick on smaller things, then we can expand it to, because the public-private partnership, though the word is in the air for the long time, government is embracing PPP only during the recent times. So we should start slowly probably, but until unless the private industry brings innovation to this model, I don't think our systems will be sustainable. Our systems will be sustainable.